Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Mugdha Warrior. These are the top headlines from the startup space. India becomes the third nation after US and Brazil to report more than 3 lakh COVID deaths. Daily death toll remains above 4,000 even as reported infections stay below 3 lakh for the 8th straight day. Upgrad acquires Bengaluru-based video-enabled learning solutions platform Imparters for 150 crore rupees. The startup will be rebranded as Upgrad Campus and integrated into Upgrad ecosystem. Through this acquisition, Upgrad will get access to at least 280 Indian educational institutions. Price of Bitcoin edged upwards towards $37,000 on Monday after plummeting to less than $32,000 on Sunday. Meanwhile, Ether rose from less than $1,800 on Sunday to over $2,300 on Monday. Cryptocurrency miners including Hashcow and BTC Top have halted all or parted of their China operations after Beijing intensified a crackdown on Bitcoin mining and trading, hammering digital currencies amid heightened global regulatory scrutiny. Cryptocurrency exchange Huobi on Monday suspended both crypto mining and some trading services to new clients from mainland China, added it will instead focus on overseas business. Snap to buy augmented reality company Wave Optics for over $500 million. The deal will help the owner of photo messaging app push its way into a future where AR eyewear could be ubiquitous. Snap, along with other tech giants like Facebook and Apple, is racing to build AR devices as the next technology frontier after the smartphone. Fintech company Zeta becomes the latest addition to India's unicorn club with a funding round led by SoftBank. Those were the headlines we were tracking for you this evening. Committed to teaching the skills of the future by making high-quality education accessible and affordable to individuals, companies and governments around the world, Emeritus has acquired ID Tech that focuses on STEM education for $200 million. The acquisition is being made through Emeritus parent company Eruditus, and it marks Emeritus' expansion into the K-12 STEM education segment. To give us more details about this acquisition, joining me now is Ashwin Damera, co-founder and CEO of Emeritus. Many thanks, Ashwin, for joining us today on the show. Now, this acquisition marks Emeritus' expansion into the K-12 segment. It is a fiercely competitive market globally, Ashwin. What made you bet big on ID Tech, and how does the acquisition strengthen your offerings? And most importantly, what made you enter the K-12 space?
Thank you for having me. K-12 as a opportunity globally is a very large opportunity. So we are excited about the space and the size of the opportunity. In fact, in some sense, it's maybe 3 to 5 times larger than higher education. But you raise a good point, which is it is competitive. There are many players. And what we were looking to find through this strategic partnership with ID Tech is a player who's serving a need that is today unserved. And for us, that need is how do we train the youth of today, the adults of tomorrow, with the skills of the future, right? So today, even as we speak, the skills of the future are artificial intelligence, machine learning, AR, VR, all of these digital literacy skills that we are still not fully teaching in our schools. And so we are super excited to partner with ID Tech. They have a history of 22 years where they have been teaching these STEM programs in the US predominantly and now globally, to bring these kind of topic and education to the youth of tomorrow. Because digital literacy and the skills of the future is what is going to transform countries like India or the globe to becoming the economies of the future.
Sure. Ashwin, I understand upon the closing of the transaction, ID Tech will operate independently and it will also maintain its team of instructors and employees. How do you plan to improve learning experiences and scale your complementary offerings for a global audience?
Correct. So Eruditus and Emeritus will stay focused on the higher education space. ID Tech will operate independently and look into the K through 12 education space. But there are a lot of synergies between curriculum, pedagogy, partners, technology. At the same time, there are a lot of differences. The way you teach a teenager is very different from the way we teach a working professional or an adult. For an adult, it may be more about how can I use the skills I learned to improve my career prospects. But for our younger students, it's also about fun. It's about experiences. It's about experiences that open your mind. Maybe think of going towards college, or, hey, do I want to pursue a career in science and technology and engineering and mathematics, right? And so we really have to focus on a curriculum that is fun and yet has very strong learning outcomes. And the way that ID Tech does this is to mix this element of synchronous learning, so live teaching with the students, along with a lot of application, hands-on application. To give you an example, they teach a course on 3D printing. They actually ship a printer to the parents and their children. And through the end of the course, you actually have to print your project. And so this is, at the end of the course, your learning is very real because you can actually touch, feel, and experience the outcome of your learning. And for children, that's very, very important. So we will further the pedagogy of such learning, which mixes kind of the theoretical as well as application.
Okay, Ashwin, as you now prepare individuals of all ages to succeed in the workforce and make STEM learning more accessible, there clearly lies a huge opportunity. STEM career opportunities are projected to grow exponentially with an estimated 3.5 million jobs in the US alone that need to be filled by 2025. But what do you make of the India opportunity? What is the kind of traction you're seeing from India?
You're totally right, as in STEM is a very large opportunity. Today, STEM is mostly taught out of the school curriculum. If you take India as an example as well. In fact, my own children, my daughter Ananya, she's 8 years old. My son Samat is 5.5. 5.5 is important. He's not 5, he's not 6, he's 5.5 if you ask him. And they are already experiencing digital education at an age that none of us, at least in our generation, experienced it. And my daughter and son are both created videos for YouTube. In fact, one of the courses that ID Tech teaches is how do you create YouTube content? And one of the other courses they teach is how do you create scenarios for Minecraft, and my daughter is enrolled in that. So really, when we think about the future of education of these youth, and as they will become the kind of the torchbearers of our generation and the next generation, it's about exposing them to STEM at an early age. They don't have to decide today to make a career out of STEM. Just exposure, fun exposure, so that, we should not think that math is going to be a challenge. We should not think that engineering is, oh my God, that's difficult. One of the things that attracted us to ID Tech a lot, 90% of the students who have finished an ID Tech course went on to pursue a STEM career. 97% of ID Tech students actually go on to pursue their undergraduate studies, college. In India, by the way, the gross enrollment ratio is only 30%. So if we can move that up through this kind of youth education, it's a great service to the country. And the one last point I would also say is we talk a lot about getting women into the boardrooms, women into leading, IP and tech-enabled companies. But we have to start early. And one of the other learning outcomes with ID Tech is, 20 years back when they started, there were hardly any women coming to STEM courses. 10 years back, it was about 10%. Today, it's nearly 30%. And we won't stop till it gets to 50%. And if we can get women into STEM early on, then we will have more people, running companies like Amazon and Google and Facebook and the homegrown examples as well, and eventually more in the boardroom. And that is the future that we see that we can shape in some small way through our partnership with ID Tech.
Okay, Ashwin, the pandemic has accelerated interest in STEM fields. And, like you mentioned, we're seeing more and more kids experience STEM touchpoints every day, whether it's coding or 3D printing. Take me through the current trends you're witnessing. What courses are in demand in India and globally?
So, any course that has an element of fun as far as the children and the youth are concerned is interesting. So there is obviously the core interest in coding, whether that is for younger children through Scratch or just Java, C++. But the way ID Tech does it is actually say, look, instead of just learning coding, see a young kid who's say 10 years or 15 years old, they are not interested in creating a program that say optimizes the inventory management for a warehouse. They're interested in creating a game. So if you can help them learn programming, for example, by creating a game, that is super exciting. So that's one of the very popular courses. The other one is on the creative side. For example, creating your own YouTube video, or for example, creating your own portfolio using Adobe Photoshop. And some of the newer courses where we're starting to see demand is around, filmmaking. We talk about STEM, and a lot of people tell me, but shouldn't children be exposed to arts, right? Because why only STEM? Are we robbing them of their childhood? But if you actually think about even film and music, take an example of a movie like Bahubali. It's art, but how much of that movie was made through, just 3D green screen and special effects? Take music. Of course, let's take an example of A.R. Rahman, who does a lot, very creative. But how much of that magic is through the sound editing and mixing that happens in the studio? And so we believe that both art as well as science should coexist. And that's what we're trying to do. And so I would say a broad range of topics are exciting. There's no one topic that just sticks out. But it's
Yes, very quickly before I let you go, 2021 was a good year for you. You've seen an estimated 109% increase in student enrollment, added 190 new programs to your existing portfolio of 270 across products. Tell me, will you be looking at Indian companies, acquiring Indian companies? What are your consolidation plans for India?
Look, the last 12 months, we did about 185 million in bookings, which is a 2x. The next 12 months, we believe we'll grow even faster. In fact, we will, at the end of the next 12 months, be larger than Coursera. And so coming out of this part of the world, we perhaps will be one of the largest edtech companies globally. So we're super excited by that. We are always looking at acquisitions. India is an important market for us. Even in the K-12 space, we had looked at all of the Indian players. And so we will continue to do that. I won't go into specifics, but India is an important market, and we are looking at companies here.
All right, Ashwin, we'll keep a track of that. Many thanks for joining us on Startup Street.
Thank you so much.
All right, on that note, it's time for us to take a short break. Don't go anywhere. There's lots coming up.
Welcome back to Startup Street. Now, online grocery platform BigBasket is on a tech revamp mode. It is working to integrate the different tech stacks across its different verticals and products under a single tech platform, which is internally being called BB 2.0. And the company is now also on the lookout to acquire several startups to boost its technology team. Joining us to talk about all of this, we have the BigBasket CTO, Rakshit Daga. Rakshit, welcome on the show and hope you're doing well. And firstly, tell us what BB 2.0 is. What will this integrated tech platform entail and how will it be different and better now for BigBasket?
Hi all, thanks so much for having me. It's a pleasure to be with you. So 2.0 really is a revamp of the technology that BigBasket is running. So as you know, BigBasket has over a 10-year history. We started off with one vertical and have since then expanded into multiple verticals, right? We have a B2C offering, we have B2B, we have BB Daily, and we are potentially looking at other offerings as well. And over the course of its journey, BigBasket had a so-called monolithic architecture with different lines of different sort of code bases serving different purposes. Sometime about a year and a half back, we decided that it might make sense to actually merge this into a single platform. We are at that maturity level where we thought instead of being a different offering for each vertical, we should focus on creating a tech platform which could enable all functionality, not only from a end user facing standpoint, but also on the supply chain side. So the problem statement really was, can you have a single platform that could serve all kinds of supply chains and make it really a flexible offering? At the same time, invest in technologies which are the best of the breed. For example, investing in different technical stacks, going into a microservices architecture and so on. So that's when we started to work on what we are now calling BB 2.0. And that's really the initiative that is in full swing right now.
Okay, so you said that the work started about a year and a half ago on BB 2.0, and we also understand that you're now looking to acquire startup teams to expand your tech team at BigBasket. Can you give us some updates on that? Are you already in discussions with a few? Have you identified any startups that you want to acquire?
So we are in the early stages of that journey. I'm actually looking to hire quite a few people over the next month to 2 months. And we figured that in addition to taking traditional routes of hiring, it would be a good idea to engage with startups who have sort of brought together a team and launched products successfully. So that's a hiring method that we are exploring. I've talked to a couple of startups in a very, very early stage, nothing concrete as of yet, but I'm hoping to actually reach out to the ecosystem, find a few companies that would be excited to be a part of BigBasket.
Okay. So you're looking to hire a lot more people for your tech team. And I do want to ask you, of course, the obvious question is whether a lot of this work on BB 2.0 is being done to better integrate with Tata Digital once the acquisition of BigBasket by Tata Group is complete. Because we understand, of course, that Tata is looking to, integrate BigBasket for its Tata Digital platform. How will that integration work out?
So that's one of the many initiatives. There's no specific focus on Tata Digital as such. Even within BigBasket, like I said, we are running multiple business lines. So for us, having a abstracted out platform which could run all lines of business through a single platform was kind of important. And the other thing, obviously, that is happening is the pandemic. Since the last year, BigBasket business has grown significantly. So what we wanted to do was invest in the next level of scale, next level of growth, etc. So we've been trying to revamp our technology platform to meet some of these needs.
Okay. So it's a revamp that's happening. And of course, Rakshit, I do also want to ask you, the question about the fact that there was reportedly a data breach at BigBasket a few months ago. That's what we also understand from cybersecurity researchers, where data of millions of your users were leaked online. Now, if you can tell us what happened there and what steps have you taken at the tech end to ensure that this doesn't happen again?
So there was an incident a few months back. Since then, a lot of investment and work has gone in to actually make our security that much stronger. We've taken a lot of hiring initiatives, engaged with external parties, etc., to make sure that incident of that nature doesn't repeat again. And we are feeling quite confident that whatever steps we have taken are enough to keep our customers' data completely secure.
Okay. But yeah, that definitely was a big data breach. We understand millions of users were impacted, and I hope that has now been made right. And lastly, of course, Rakshit, I want to ask you, what were the learnings on the tech front from the first wave for you, especially now that in the second wave, we are again seeing fresh restrictions, fresh lockdowns, and of course, a lot of demand that you must be seeing on BigBasket. How are you meeting it in terms of the technology?
Sure. So last year, when the first lockdown hit us, there was a big traffic surge on BigBasket. There was a massive demand for some of our offerings, and we weren't as prepared back then. So we did take a few days to get back on our feet. And this was happening at two levels, not only from a technology standpoint, but also from a process and operational standpoint. Since during that lockdown phase, we actually kind of created a number of initiatives to help meet the demand and the surge in traffic and so on. So whatever investments we had made at that point in time actually are serving us quite well this time around. An example of this is if you're a BigBasket customer, you would notice that in a lot of areas, in a lot of cities, we are running the token system where a customer kind of requests a token, and once he gets a token, he or she is assured of a delivery slot. So this is an example of some of the initiatives we are taking to actually meet the enhanced demand during the pandemic.
All right, Rakshit, thank you for those details. Many thanks for joining us today on Startup Street.
Thank you so much for having me.
Moving on Hot Seat today, Slice, a new age credit and payment startup challenging the credit card industry, today announced that it has raised a cumulative debt of 165 crore rupees in FY21 from 18 leading financial institutions. Out of this, the company raised 126 crores in just the last 5 months of FY21. To know the future roadmap at Slice, joining me now is its founder and CEO, Rajan Bajaj. Rajan, welcome to the show. Let's talk about the debt you have raised in the last fiscal. Why debt and not equity, and where has the money been put to use? Rajan, I believe you're on mute. If you could kindly unmute yourself. I think you're still on. Can you please unmute yourself? You're still on mute. Rajan, I still can't hear you.
Hey, is this any better?
Yes, Rajan. Yes, we can hear you now. So my question was, if you could tell us where all the money has been put to use and why debt and why not equity?
Yeah, I heard you. I said, thanks for having me here, Shruti. I hope you're doing well. I think it was my headset that was causing the problem. So, usually equity is a costly way of raising funds for any startup. The reason startups raise equity is because there's usually no other option. At Slice, we have been fortunate that after raising a lot of equity capital in the first 4 years of our startup, we turned profitable. And since then, we have been growing profitably, barring a few months of last year, of course. So we don't really need to keep raising capital to survive in the coming few years. And that's why we raise capital, equity capital, as in when we need to raise equity capital. And we don't want to unnecessarily dilute our equity capital for ourselves, our shareholders, our team members. Debt, that way is much, much lower cost compared to equity. And now that we have a good amount of access to debt, the financial institutions trust us to give their hard-earned money to us in form of debt. We want to take advantage of that.
Rajan, you have processed a transaction volume of over $250 million and you aim to achieve a gross transaction volume run rate of $1 billion in FY22 and also grow your member base to 1 million. What makes you so bullish and how do you plan to achieve this?
Sure. So we have grown by about 6x in this year from April to March. At current volumes, we are at about $250 million in GTV run rate. We're looking to grow 4x in this year, and we are very confident that with our waiting list of 1 million plus users, we already have 300,000 people, but we have close to 1 million users who are in our waiting list. And the kind of digital adoption drive that we're seeing in India in the last 4-5 months and the last year in the first wave also, growing 4x from here on is something that we will do easily in this year.
So you plan to grow 4x now. Raj, how long have you been profitable, and is an IPO something that you're actively thinking about in the future?
So, look, IPO is something, once you reach a certain scale, you can always consider doing. We turned our first profits in FY20. We were profitable in the entire year. last quarter, we again had profit after the first few months of COVID first wave, and we have been profitable quarter on quarter since then. So right now, at $250 million in GTV, growing to about $1 billion in next 1 year or so. Within the next 1.5 years, we'll be at about $100 million in ARR. At that revenue, we can easily do an IPO of $1 billion plus in India. So at that time, when we reach to that scale, we'll probably a few months before that, we'll decide whether an IPO is something that makes sense for us. But right now, our focus is on scaling and constantly improving the product experience of our customers and adding more features for them and serving the needs of these customers as fast as we can.
Okay. Now, over the last year, buy now and pay later has emerged as a key trend. Have you seen a growth in this vertical as well, since you saw 40 to 50% increase in customer spends in a tough pandemic year? What have been the key user trends post-COVID?
Yeah, we have seen a huge amount of adoption in customers, not just in buy now, pay later, but in general in digital payments, because it's easier to make the payments. You can just tap and pay now up to 5,000 rupee on your Visa, MasterCard, RuPay card at any of the merchants who allows NFC transaction. And now many mobile phones are also coming up with NFC option for customers. So people don't have to tap, people don't have to type their PIN, or they don't have to pay cash, take money out of ATM, which they feel unsafe with. And anyways, it has always been a hassle. But last 1.5 years has made this adoption probably 2 to 3 times faster. So our 2-3 works of work somehow tragically in this whole scenario has happened in last 1.5 years. And we are seeing that is not stopping. It's accelerating only from here. So we have loads of work to do in the coming few quarters. And we think that this adoption will keep growing. If you look at the overall credit card industry, it's almost at $100 billion GTV now. Slice by end of this financial year will be close to $1 billion in GTV. So we'll be already 1% of this industry. Our target is that we should be at about 10% of this industry in next 3 to 5 years. And we expect the industry also to grow to about $300 to $400 billion in the next 5 years. So we'll be at 10% of that industry. Industry is growing very fast. We are growing faster than the industry.
All right, so there's clearly a lot of potential there, and we wish you the very best for all your future plans. Thank you very much for joining us on the show today. With that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.